The basis of money, whether it's fiat money issued by the government or central bank or the banking system, all money is basically based on credit. It's trusting people to provide.
There's been a revolution in payments.
Democracy, poverty reduction, and cryptocurrency.
Communities get their own currency.
Decentralized social networks. All of this gets either funded or not, and then people are almost like held hostage for that. So that's where I want to bring in cryptocurrency and kind of talk about this movement. I feel that was started with.
Let's talk about credit first, because credit is the essence of money.
Okay, go ahead.
When banks grant credit by making a loan, they're actually empowering someone to bring money into existence. No money is created until the loan proceeds are spent into the economy. And this is an important point that E.C. Regal made in his book, Private Enterprise Money. And it's very important to understand that the basis of money, whether it's fiat money issued by the government or central bank or the banking system, all money is basically based on credit. It's trusting people to provide goods and services in return for the money that's been created. So to make it very simple, let's suppose there were no banks. Let's suppose there were no money, that we lived in a society where everybody was both a producer and a consumer, which is basically the reality for most of the people in the world. You know, infants, of course, are not productive. They're totally consumers. And invalids, likewise, are mostly consumers, and they don't produce anything. But the vast majority of the people are prosumers, as Alvin Toffler called them, producers and consumers, both. And so let's suppose we're all producing something and we want to trade with one another. Well, we can do a simple barter. I bake bread and I trade it to you for shoes that you make. But that's a very inefficient way of doing the exchange process because it depends on a coincidence of wants. You need to want bread and I need to want shoes. But we can collectivize this process by simply keeping a ledger of debits and credits. You want my bread? Okay, I'll sell you my bread and I'll get a credit from you, which I can use to buy something from somebody else in a wider circle. Credits can circulate throughout our community, and eventually you have to accept credits back from someone who wants shoes. So it's just a matter of creating a space in time for the reciprocity to be completed. I talk about the reciprocity circuit in my books. It's a matter of circulating the credits throughout the community, and eventually the creator of the credits, you who bought my bread, accepting it back in payment for what you have to sell, namely shoes. So really, the reciprocity in the exchange process is very simple. It's just a matter of keeping a ledger.
So wait a moment, about that reciprocity. There is one point in there that I wanted to ask about. You mentioned that I issue some credit, and I understand why you would take my credit because you accept my credit as a personal relationship that we have. There's a limit to how much you would accept. Right. And in the cryptocurrency world, it's called a TrustLine. So I may extend you a TrustLine of $20. Let's say the TrustLine is denominated in dollars. And when you've exhausted that TrustLine, in order to reset it, you must actually send me $20 on some sort of ledger, could be a bank, it could be something that we trust more than this one-to-one relationship. My question is, you said that money is credit, and I completely agree. My question is more about the transference relation, of the trust. So you trust me for a certain amount, but why would a third party trust my credit? They've never met me. They may not be able to go after me for services, let's say, and especially on the internet, they might never meet me. So you've got my IOU. Is there, in other words, here's my question. Does my credit have a price and a strength based on my trust rating, that extends more and more? Like a bank in a local area, I could trust the money. And then further out, Mark Twain used to call it wildcat money, with the wildcat banks would print something and you don't know if that bank's around anymore or that producer's around. Can you talk a little bit more about how the trust is preserved as it goes around that circle?
Well, it's not just me trusting you. We're talking about an organization now. We've organized a fairly large group of prosumers into a trading circle where we all agree to use these credits as our payment medium. And so there has to be a way of determining how much credit you merit in this circle.
Mm-hmm.
And that will be based on your production and sales history. So it's basically an algorithm applied to each participant in the exchange organization. And the algorithm is heavily dependent upon your trading history. So if you sell typically $1,000 worth of shoes a month, you might qualify for a line of credit of $2,000 or $3,000 before you max out on your line of credit. If another person sells $10,000 a month, typically, they would qualify for perhaps $20,000 or $30,000 line of credit. So basically, we're monetizing within the circle the production or the production capability of each participant. The more you produce, the bigger your line of credit. And the bigger your line of credit, that means the more that you can spend before you need to earn. So the way the money gets created is by someone with a line of credit spending it into circulation, that is, buying goods and services from someone in the association.
Someone who trusts
This is
their IOU.
a perfectly sound way of allocating credit, and it's typically done in commercial trade exchanges, which have been operating successfully for 50 years or so. Basically, commercial trade exchanges have a few hundred to a few thousand members that participate in this moneyless exchange process. It's just a matter of keeping a ledger and allocating credit lines to each participant in the way that I described. So when someone buys something, someone with a line of credit buys something from someone in the circle, their account is debited, it goes negative. And when someone sells something, their account is credited, it goes positive.
That account that you're talking about, it's stored on a community ledger, so the whole community will be able to see how much credit someone's used up? Or is it only
the rules are varied. It depends on the agreement amongst the members of the association, whether they want to make the ledger open or not, or assign control of the ledger to a small group or individual. So this is an important consideration. What is the proper form of organization for a credit clearing exchange? And typically, commercial trade exchanges are operated as proprietary, small profit small for-profit businesses, either incorporated or not incorporated. And so the control of the ledger is in the hands of the trade exchange owner and operator. There are trade exchanges that are cooperatively owned and managed by an appointed management group. But we could have an open ledger, which is accessible to everyone in the group. I think that might be something worth looking at.
Right. So you've mentioned that there are two options here: an open ledger that's open to everyone in the group, or a trusted third party, if you will, like an operator of an exchange.
All right.
For a moment, let's talk about the trusted third party, and then I'd love to talk about the open ledger, because I feel that cryptocurrencies enable exactly the open ledger. And Intercoin specifically, for example, my project is talking about exactly open ledgers for communities. So you can see on the ledger, everyone can make the decision together. But first, I want to talk about the first option, concentrating the decision-making power, again, in the hands of the owners, to which you delegate this ledger that you may not be able to inspect at a moment's notice when you're extending credit. When you're an employee and you decide to work for this or that company and you accept their IOUs, with a third-party ledger that's open to your community, you'll see, okay, this person's got this much. You might not even understand everything, but it will tell you the summary on your phone. The other one is essentially you're trusting a third party. So my question is, our system, because computers have only become prevalent in the last few decades, and then the internet has come around and so on, and now we have the blockchain, but our system was set up before. And so we needed to trust the post office to deliver our mail, and we needed to trust elected representatives to have our interests at heart when they're voting, and so on. We delegated these decisions to others, and in a way, when we run an organization like a community, we elect people, a mayor, and then they appoint some bureaucrats, and they decide the monetary policy. So in the system of the credit clearing exchange being owned by and operated by a group of people, how is that different than a bank making the decision to extend credit to you based on your past history and underwriting and looking at your statements going back and your accounts receivable aging reports? How are the two different?
Well, it's a matter, first of all, of scale. Each commercial trade exchange is in competition with other trade exchanges. So if I happen to own a computer shop and I'm being recruited by a trade exchange to participate in their credit clearing circle, I'm going to want to know how well that trade exchange is managed. I want to know whether they're inflating their internal credits by over allocating. I'm going to be very cautious to begin with in selling my computers to trade exchange members, because I want to make sure that I've got the opportunity to get something I need from the members of the exchange. So I can limit my sales until I'm confident that I can spend the credits that I earn. There have been in the past, of course, a lot of abuses within that industry. And the trade exchanges that have been abusive have typically gone out of business because of, it's a matter of the flaws being discovered fairly quickly. The ones that survive are the ones that give good service to their members. And I think it's still possible within those trade exchanges, when I'm contemplating a sale to a fellow member, to ask what the trade balance is for that member before I decide to make the sale. That's one thing that I can do.
And how are you going to do that with the privately held ledger? that's
Well,
operated privately.
I asked the operator for that information.
But how do you
So
know that
the
information
question
is?
can I be sure that I'm getting accurate information? Yeah, well, there are no trustless systems. I mean, you have to trust something or somebody in every situation. When I board an airplane, I have to trust all the systems that it went into building that airplane, making it safe, and putting competent people in charge of its operation. So there's a whole lot of trust in everything we do.
There's absolutely a lot of trust with the banking, where you ask for the credit rating and you trust the credit report of this the credit rating agency. Absolutely.
Yeah, and we see that even those are not to be trusted. Again, citing The Big Short, we saw that the bond rating agencies were derelict in their duty at best and fraudulent at worst.
That's right. Even the Lehman Brothers audit, Lehman Brothers declared bankruptcy after the auditor said everything's fine. I think something like that.
Yeah, so you can't trust the big 8 accounting firms either. So
Okay, so that's the
that's what
breakdown.
I'm saying.
I
The
think
civilization is breaking down because the systems have been totally corrupted and people are appropriately losing trust in them. So, we have to reconstruct civilization from the bottom up based on proper incentives and systems.
so. I completely agree with you about the decentralization of power and giving it to the hands of local exchanges and communities. What everything you're saying about the breakdown and the 2008, crash, let's say, and the fact that even the auditing agencies were not to be totally trusted because the incentives were not aligned, and the fact that people got bailed out when they shouldn't have been bailed out, and so on, because they were too big to fail. That's what led to the creation of Bitcoin